Are home prices finally coming down in 2026? Let me ask you something. If home prices were really going to come down, wouldn't we be seeing it clearly by now? We've had higher mortgage rates for quite a while. Inventory has improved in certain parts of the country, and buyers aren't bidding as aggressively the way they were 2 or 3 years ago. So, it makes sense that a lot of people are thinking, okay, this has to be the year prices finally fall. But once you step back from the noise and focus on the numbers, the situation isn't as simple as it feels. Yes, the market has shifted. Yes, things have cooled from the frenzy we experienced. But cooling off and coming down are two very different things. So today, let's look at what the numbers are actually saying and what that means for you if you're buying or selling in 2026. No drama or fear-based predictions, just data and perspective. So first, we need to look at what does the national data show? Let's start with what it's actually telling us. The Real Estate Institute of Canada shows the Canadian housing market entering a period of normalization and stabilization in early 2026, following a price reset that began late last year. The growth rate is much slower than what we saw during the pandemic surges, but it's still positive, specifically in Quebec and the prairies. This matters because when people talk about a housing correction or housing crash, they're usually imagining a broad national price decline across the board. That's simply not what the data is showing for the country as a whole. According to the Canadian Real Estate Association, or CREA, the market is increasingly fragmented with major differences happening between provinces. Alberta specifically is considered a stable market as it has remained relatively flat month over month, with our benchmark price being only slightly lower than last year by 3.1%. The CMHC market outlook projects national prices to stabilize and rise slightly, with Ontario being the only region to likely see continued declines. Interest rates are expected to remain stable and non-stimulative throughout 2026. So when you step back and look at the broader picture, the pattern is consistent. Growth has cooled, things are more balanced, but prices aren't falling nationally. So why does it feel like prices should be falling? Well, homes are still expensive. Monthly payments are high because of mortgage rates, and first-time buyers are stretched. So emotionally, it feels like prices should be correcting. But here's what's happening instead. Higher mortgage rates cooled demand, yes, but they also locked many homeowners into low-rate mortgages from a few years ago. That limited the number of people willing to sell because giving up a 3% rate for a 5 or 6% rate is a big jump. So supply never surged the way some expected. In many markets, we're still dealing with relatively tight inventory. Not extreme shortages like before, but not oversupply either. And when supply stays tight, even softer demand isn't always enough to push prices down significantly. That balance is what's holding prices steady. Buyers are more cautious, sellers are more realistic, but neither side is desperate, and markets don't crash when both sides are relatively stable. So what could happen in the rest of 2026? Well, looking ahead, most forecasts remain conservative but steady. When several independent reports show the same trend, this adds credibility. But it doesn't mean every city is experiencing the exact same conditions. There are pockets, especially in some oversupplied city areas, where prices have softened, and we may see a little more of that in specific markets. Local conditions can vary depending on inventory levels, job growth, and buyer demand in that area. But nationally, the data does not support the idea of a broad housing downturn. What we're seeing is normalization. The market has shifted from a rapid acceleration to a steadier pace, and that's actually healthier long term. So, what does this mean for buyers and sellers? Specifically, what does this mean for buyers? If you're waiting for a dramatic drop in home prices, the data suggests that may not be the most likely outcome. However, buyers today may have advantages that didn't exist a few years ago. A couple of these things include you might have less bidding competition, more inventory choices, more negotiation flexibility. Those factors can sometimes create more opportunity than a small price decline would. In other words, you may not see lower prices, but you may see better terms. And in many cases, that can have just as much impact on your overall investment. So, on the flip side, what does this mean for sellers? Well, for sellers, there's no longer a name your price market. Pricing strategy, presentation, and preparation matter. Buyers are comparing more carefully now. They have options. That means positioning is everything. But values are not collapsing. In most markets, well-positioned homes are still selling at stable levels. The sellers who win in this market are the ones who price realistically from the start and present their home in a way that stands out. So, are home prices finally coming down in 2026? Nationally, the data says no. What we're seeing instead is stabilization. The rapid run-up we experienced a few years ago has leveled off, but broad price declines just aren't showing up in the national numbers. Now, what's happening across the country and what's happening in your neighborhood can be two very different things. Real estate is local. That's where the real story is. So if you're wondering what this means for your home's value or your buying power, let's take a closer look at your specific market. You can reach out to schedule a one-on-one strategy call, and we'll build a plan that makes sense for you this year. If you found this breakdown helpful, make sure to like and subscribe so you don't miss future market updates and practical real estate insights.